All right. Good evening, everybody. How's everyone doing? Let's have a quick check in. You can interact in the chat, ask questions if you have any. We'll be sure to cover them. Let's make this an interactive evening. That's a goal for tonight. Welcome back to Cashflow Sundays. We'll be doing this every week live over here on Twitch. In this live stream, our goal is to tell you about everything that has happened in the stock market last week, everything that's going to happen. We'll be doing some stock analyses. But most importantly, you can ask questions about stuff that's going on in your life, in your portfolio. You can ask us questions about how our software works. Nothing is off the table. If you have your own surprise of the week, be sure to share it. I'm very interested in what your surprise was last week. For this evening, we have the following topics to discuss. Let's take a quick look at my notes. We have the news of last week. I think a big one were the Fed rate cuts. We've talked about this quite a lot in the last few live streams. We'll be talking about Nvidia investing in Intel. I think that's a bold move, strategic move. We will be talking about Oracle taking a stake in TikTok in the US. US conglomerate that will be managing TikTok. I think that's an interesting phenomenon as well. It's quite a geopolitical space that we don't see quite often. And we'll be talking about the September effect. I heard a buddy of mine talk about this, that in September, stocks always dip. That's apparently a historic fact, but what's going on? We'll talk you through it. We'll be having some investment tips. What is your job as an investor? How can you manage your own portfolio? What is passive investing? What is active investing? And last but not least, we'll be doing some stock battles. And we have a few interesting ones, as you can see in the title of the stream for today. We'll be doing Pinduoduo versus Alibaba, two big Chinese stocks. And Pinduoduo is on a huge growth potential. Alibaba is a little bit more of a stable business, but we'll be seeing how they pair up. Pinduoduo and Alibaba, they're both active in the payment space in China. They're one of the two big ones. Alibaba does more, but we'll be doing a deep dive, so I won't get into it now. We'll be looking at Novo Nordisk versus Eli Lilly. The battle there continues to grow amongst the GLP-1 sellers. Let's call it what it is. They sell drugs, and let's see how they're doing. Let's have a little check-in. We looked at them a few weeks ago, and let's see if there's a development there. And we'll be talking about software stocks versus hardware stocks versus AI stocks. We'll be having another book tip to end it on. So let's dive into it with my surprise of the week. And as always, there's a little bit of a French touch. I have quite a good connection with French. My wife is French, so that's my diplomatic relation, or my diplomatic, how do you call it? My diplomatic responsibility, my duty as a European to connect our nations. We had a strategic marriage, based on love, but all the fun aside, I think my big surprise of the week, I read that the French are up to their 5th prime minister in just 21 months' time. That's absolutely insane. We're not doing much better here in the Netherlands. Our cabinet has failed as well. But the French are definitely worse off, and it shows. If we look at it from an economic perspective, this is a rare phenomenon, but you see that the corporate interest rates in France are lower than the national interest rates. Usually, you want a big discount on, or you want to get a discount, and from an investing perspective, that means you get more money or you pay less for the return you're getting on corporate investments or corporate bonds. And the reason why there's just a bigger risk when you buy corporate bonds, and the corporate interest rates being better than the national interest rates is something that rarely happens, and it shows that the trust in the market for the French government to get their business in order is very, very low. So we'll be seeing how that goes. But as always, politics can shift overnight. Stuff can happen very quickly, and the French can find a way to fix this. I'm sure of that, but it won't be easy. They'll probably be out on the streets. To me, huge surprise. 5th prime minister in a single 21 months. That's how often do you see that? I always think that America is going to shit with Mr. Trump, but a little closer to home, we have problems as well. Let's dive into the news of last week. First off, I think the big ticket item is the Fed cutting interest rates by a quarter percentage point. And the Fed has they're currently in quite a difficult position. They have a double mandate. They need to make sure that inflation stays low and that the employment rate is good. That's their dual mandate. And what we see in the US is that inflation is still relatively high, but the job market is shit. And those two conflict. Usually they're more in line, and that makes the job of the Fed a lot easier. And they had to act, I believe, and that's why they cut interest rates. And Trump obviously immediately criticized Jerome Powell, but I think he wanted more or bigger interest rate cut. And I assume that more interest rate cuts will follow, but he won't throw them all out, or he won't immediately do all his rate cuts. Then there is very little he can do afterwards. He wants to hold some of he has an elephant gun, or he has his own tools, and he doesn't want to use all his tools in one go. But the interest rates cut, we actually saw stocks drop a little bit. I think people expected a bigger interest rate cut than we got, even though we did get an interest rate cut, and usually that leads to high stock prices for the simple reason that businesses can invest in themselves a lot easier. Money becomes cheaper. So if you compare the interest rates from before and today, money is a lot cheaper now, so it's a lot easier for businesses to invest. And the reason why stocks also rise is because the interest rates that you can get on US Treasuries is currently lower, and that means the rate of return is lower and stocks become a more interesting investment. You're willing to, the return there is higher, and you're taking a little bit more risk, but because your return on treasuries is lower, stocks become more interesting. And I also think that treasuries are still, I think the faith in the US government has lowered, and that might limit the return you can get on US treasuries or on the payout rate of them. I don't think that's a big risk, but as always, risk is involved when you're investing. It doesn't matter where. There's always risk. I don't believe in a risk-free investment. Now, next up. Another interesting thing is that apparently the interest rate on mortgages rose despite the Fed rate cutting it. I don't really understand what's going on there. If you have an idea or understand what's happening there, please let us know. I think next week there will be let's look ahead slightly. There will be new home sales report. Might be interesting to look at and tie it into the mortgage rate. We'll be talking maybe more about this next week when we understand what's going on there. Next up, Intel surges 23% after a $5 billion Nvidia investment. Now, $5 billion sounds like a lot of money, but for Nvidia, this is about, 10 days of free cash flow. And for Nvidia, this is a hugely strategic partnership. I think it makes a lot of sense. They can get their, Nvidia, of course, make the GPU chips. They're massive for the AI race. And Intel creates CPU chips. And they want to create more chips. They got an investment from the US government, and with all those investments, they can build more factories and ramp up production. And for Nvidia, this could be a huge strategic play because they're less dependable on competitors of Intel that are all based overseas. A big one is TSMC, another one is Samsung. Intel being a powerhouse in the US could be beneficial for Nvidia. And if they want to approach, I think, mostly the consumer electric market, this partnership makes a lot of sense. In laptops, you use both type of chips, both made by Nvidia and Intel. They could create chips together, and I think that's the bigger newsworthiness in this article than just the $5 billion investment. Like I said before, $5 million in the entire chip market doesn't get you very far. But this strategic partnership and them creating something together, that's what's interesting here, and that's what you should pay attention to. And I'm very interested how this will play out. Intel apparently surged. I think for Nvidia, this is a smart play as well. Then we continue with the strategic and geopolitical interests. Oracle is going to take a stake in TikTok together with the Silver Lake Consortium, or I believe Oracle is part of the Silver Lake Consortium. And they'll be owning the US version of TikTok that will be responsible for the US operations of TikTok. they'll be owning 80% of it. The other 20% will be owned by by Chinese investors or by Chinese shareholders. And I think this is interesting. I think it's noteworthy. Oracle is becoming quite a big player. We talked about them last week, surging their stock price surge because they had a huge order book in their cloud services around AI. And now they're investing in TikTok. I think I'm not sure if it's still the fastest growing social media out there, but it's for sure the most popular one currently. That's about it. I don't really have any more to say about it. I don't know if this is a great play for them. I think the stock dropped on the news. It's not their core business, but it could be a great opportunity to make some money. And I think that's about it. That's the way they got into it. Let's say if there's anything else that's being talked about that we might have missed. Current users will be asked to shift. Apparently there will be a new app in the US. That's quite a shift. Wrote it up report July. Yeah, they're launching a standalone app in the US. Separate algorithm and data systems. Now this is where Oracle is the huge player, and this investment for them makes sense. The data system can be provided by Oracle. Yeah, they would handle user data in Texas, locally. Yeah, all right. Great, good for them. I'm always interested how this plays out in the end. For me, this is not an investable case based on this news, but it's interesting to see and to follow and to see where this goes and where this will take us. There might be some pressure for Oracle to participate in this. They might be willing themselves to participate in this. But from a business perspective, this is not their core business. It won't become their core business. And I think it could be quite a struggle with the Chinese version of TikTok. We'll see how it goes. Another interesting phenomenon to talk about is the September effect. And this refers to historically weak stock market returns observed during the month of September. A buddy of mine talked about this. You might have heard this as well. I talked with a statistician about this, and he basically said, if you measure every month, there has to be a worse month, and apparently that's September. There is no real reason why this happens. There is no statistical evidence why this happens. There is some, but this depends on what time period you look at. According to Investopedia, there's some evidence of this happening, but it's not very strong. It's very dependable on what period you compare to one another. And I don't know. It's not something as an investor it's not something you can act on. If you sell all your stocks before September and buy everything in October, or buy everything in September and sell it the month before, then this is not something that can last very long. And most economists and market professionals discount the existence of the September effect. This could also create it. Some consider the observed weakness in September to be attributable to seasonal behavioral bias, as investors make portfolio changes to cash in at summer's end. Yeah, could be true. It's more of an anomaly. I thought it was interesting to talk about. Sometimes there are these statistics that float around stock investing and around stock market and on Wall Street. There doesn't necessarily have to be any truth behind it, but it becomes its own living myth. And I think the September effect is one of those effects. Some people know it happens. Another one of those statistics that apparently on Monday, that's the worst day for stocks. Again, if you look at all the days, there has to be a worse day, and apparently that's Monday. Maybe after the weekend, everybody had brilliant insights that they needed to sell, or they got depressed, they had to go back to work, so they want to sell. But that's a phenomenon that had actually been observed, and then everybody started compensating for it, and the effect disappeared. But it's still being talked about, and I think the September effect is in the same boat, in the same vein. So interesting from a stock market perspective to talk about on a more broad basis. Now for our news segment, we will end it off on what's going to happen next week and all the important events coming up. there is very, very, very little noteworthy going to happen. September is also a slow month when it comes to the news. Apparently, there will be a new home sales report. We talked about the Fed cutting interest rates, and we also saw mortgage rates going up. So this might be interesting to look at. There will also be initial unemployment. Don't really care about that. Existing home sales. We'll be getting earnings from Costco. That could be quite interesting. Personal income and outlays report. What's happening in the market this week? This is outdated. Okay, well, that about does it for the news.